How many of you liked roller coaster rides when you were a kid, but as an adult, you kind of get queasy? Well, if you're in the stock market, it is quite the roller coaster ride. I hope you're all doing okay. We had such wild swings today. And now, after hours, the Trump tariff talk, everyone's been waiting for Liberation Day. And the market at first was riding high. Some commentary came out about 10% across the board tariffs. And then he held up a big board showing that he was going to reciprocate with 50% tariffs based on what we're getting in America, and China being so high with the amount of tariffs that are going to be put on China goods. That's when the market really just started dropping fast. And companies that are affected by large tariffs on China started dropping as well. But here's what I wanted to share with all of you. I hope that you're really thinking through this. I had gotten a message from a brand new student, and she was wanting to know if it was time to sell everything. And that was just concerning because I thought, I bet there's a lot of you out there that are wondering the same. Now, of course, there's nothing wrong with cashing up. I would do it with my positions that are actually ahead versus locking in losses, especially if it's a quality company. And I've shown all of you how to check to see if you're dealing with a quality company. If you are, I'd hate for you to lock in losses if we are going to have more of this roller coaster ride over the next couple of weeks, and you're going to see some of those same positions that are red today start to become green, or at least more green. And if you think about it, there's a lot of posturing for position right now. So everything that we heard today, over the next 4, maybe even 6 weeks, we are going to see concessions made. We are going to see negotiations taking place. And there is going to be a constant news cycle where new announcements come out and the market reacts to it both positively and negatively. So my role for all of those watching me, and definitely for those within my community, is how can we capitalize on that roller coaster ride, that volatility that we're all experiencing? And really, the answer is selling puts. It's the best way to capitalize on the up and down whipsaw action that we're seeing. Let's talk about what it means if you are a put seller. And let's use an analogy with insurance because that's real easy to grasp. And so let's assume that you have a home that does not have flood insurance because you feel like you're in an area, you don't have a lot of bodies of water around you, you feel like you're okay. But then that once in 100-year rainfall starts happening, and then all the rivers around you start flooding. And now you're starting to see water on the streets in your neighborhood, whereas before you never had that issue. Now, if you go to try to get flood insurance, your broker is going to say, wait a minute, we are in a crisis situation right now. More than likely, you won't even get insurance in that situation. There's a waiting period. But if they were to allow you to get insurance, it would be super expensive because the threat and the unknown is literally right at your doorstep. So if you are a put seller, then you are basically insuring somebody's portfolio. You are helping to insure the portfolio. Maybe they have a lot of positions of a stock, Palantir, Robinhood, Tesla, Google, Amazon, and they want to make sure that if that stock comes down to a certain area, that they either get compensated for it by way of the put that they bought becoming more valuable, or it could help hedge their position. And so that's where you step in. That's why insurance companies exist. It is to help protect people and their property. So you, as a put seller, are trying to protect people's portfolios, but you're being paid handsomely for it. And in times of crisis like now, that's how you really start to gain a lot of premium, and you can use that to your advantage. Now, I would still do it very responsibly. So one thing that we're doing that's helping us quite a bit, we are going much further out in time. I did a video on that the other day, and we're going super low in strike price. Basically, any of the strike prices that we're looking at, if we are put those shares, those are at a very reasonable price for quality companies that would allow us in the future to see appreciation and then start selling calls. And nothing says you have to wait until closer to the expiration date to take a win. So if you sell a put, let's say you sell a put on NVIDIA for $85 and you go out to the end of the year. Well, if tomorrow NVIDIA pops up on any kind of good news, there's nothing wrong with going ahead and buying that contract back in profit. Maybe you made a couple $100 on it and there's a lot of opportunity left in the trade, but you don't want to take your chances or you want to get in and out and be nimble. Another thing that is working really well for us. Now, it's high maintenance because you're looking at getting in and out in the same day, sometimes within an hour or two. But we have taken our leaps positions on the SPY and QQQ, and we have been selling daily calls against those positions. Now, we get out of them in short order, and we have done this over the last, I think we're almost 3 weeks in, and we have won every trade but one. And when we did not win the one trade, we didn't sell calls right away. We waited until our leaps had appreciated in value, and then we got back to the business of selling calls. And so if you are fortunate enough to have a leaps in the SPY or QQQ, that may be something you want to consider, but we definitely close out these positions before the day set. Because in this crazy environment, there's just no way to know what's going to happen after hours that will affect it in the overnight hours. And you don't want to wake up to a situation where you're panicked about your trade. Now, for those of you that are in my community, you've already seen this, but we like to recap all of our performance and see how we did each quarter with the trades that we're making. And so I was very excited. We wrapped everything up for quarter one, and these are the results we are seeing. So let me explain what you're looking at. As you can see, we have collected quite a bit of premium and or had our shares called away in profit, and that is what has accounted for the cash that we have been able to keep. This is our profit. Now, we were assigned shares. We actually took assignment on some shares of quality companies that have yet to have their story played out. We're holding on to those shares in our account, and we're waiting for price appreciation to do anything with them. Some of them had already gotten to the point where we could start selling covered calls, and we did that. The other thing that has helped us a lot are the buy right positions, because we are able to go ahead and write covered calls. And a lot of times we do these on a Wednesday or Thursday when it increases our chances of having the shares called away, because we are putting the call in place to take our shares at the end of the week. And if the opposite happens and our shares are not called away, well, then we are showing some profit on our position, and we will rinse and repeat and sell calls again the following week. So these are the ways that we're being nimble and adjusting our trading so that we can remain profitable and actually make good money in this environment. And so the way that it works is we are stacking dollars, we are stacking premium, and then when everything turns around and starts heading back up, we will now have a larger base of cash to work with because we were collecting premium all the while. Had we just put our money into the SPY, and unfortunately, we would have seen that drawdown. Now, to be fair, we probably wouldn't have sold out of those positions, and so that will eventually come back too. But isn't it nice to go ahead and have some cash that you're generating during this turbulent time? So here's a fun stat for you, and it will calm you down a little if you're worried about should I buy now or not. Well, as we know on how the market pulls back, we could see a 10% correction. We've already seen that. We could go down to 15%, as low as 20%. But if you look back over the last 50 years of market drawdowns, anyone that purchased at the 10% level, they were ahead of the game a year from then. So for those of you that are wondering, is it time to get into the market? Is it time to use some of that cash on the sidelines? Well, there's nothing wrong with starting to at least get into some of your positions now. And then if we have a deeper pullback, you can add to it and average down. But keep your mind focused on the future for your portfolio. Think about a year from now when everything that you've invested in now is riding much higher. I hope you will help me congratulate one of our members. His name is Alan, and he has been with me for only 5 months, but he has learned enough with how to select positions, how to roll his positions, and he has generated enough income to have confidence to turn in his resignation and get out of corporate America. So he is retiring early, he is retiring young, and that is what I wish for anybody that is trying to learn how to do this. So we want to congratulate Alan. He has been an A-plus student that he was able to get to this point, and arguably in the toughest environment to trade. The market has not been going up over the last 3 months, and he was able to generate this kind of income in a red market. So if you can do this in a red market, then that definitely is building confidence that this can be definitely be done in a bull market. Okay, I hope that gives you something to consider. Just be prepared for the craziness tomorrow. And I have to go. We have an active tornado warning that is going on right now. The thunder, you might hear it in the background, and the trees are starting to blow. But of course, I will be talking to all of you again soon. Remember, if you're with me, Trading with Ashley, there is no trader left behind.